This is going to be part of our trade selection and strategy CD. We've already added an EEM, an IWM, and a SPY position. Now we're going to take a look at the diamonds. The diamonds is the ETF for the Dow Jones Industrial Average. And if you take a look at the indices over here, you can see that the Dow Jones Industrial Average is at 127.76, 12,776. The diamonds try to mimic the price of the Dow Jones Industrial Average. It's about as close as it can get. There are some adjustments that are made, I guess, to the index itself, to the ETF. So, but it's pretty close to it. So if the Dow Jones is trading at 12,775, the diamonds are pretty close to it. It's at 127.76. You take the ETF, you multiply it by 100, and you get the 12,767, which is only about 10 points off of the actual index. So it tracks the Dow Jones Industrial Average pretty closely. Now we've been in a downtrend here, and this is how I add all of my positions. We've been in a downtrend. You can see that the channel that I've created here goes back to about October of last year. And what I like to do is, of course, now the positions that we had previous to this, were based on the support and the resistance lines in this channel, so that I could kind of determine where prices will probably fall into as we were going down into this down channel. We may have turned the corner here, and we may now be following this blue up channel trend line, which I drew back a few weeks ago. Because it looks like there were some points here that it actually hit, and there were some support points here that it actually came down to. So, this was a prior resistance point here, this 25%, 75% channel line, and it became support in here. So now that resistance has become support, I'm also thinking that perhaps the blue line now, the blue channel lines now is the new uptrend channel. So if that is the case, and it looks like we were starting a new uptrend here, I'd want to set my iron condor. I'm going to do an iron condor on the diamonds so that it's around 133 on the upside, because that's above the blue channel line. And these channel lines are only guidelines. I mean, the price can do anything it wants, really. It can go up, it can go way above this, it can go way below this. It doesn't really matter. But it's just because it's a very liquid market and there's many players in the market, things do tend to go in channels. So that's how we're going to play them. On 133 on the upside, 121 on the downside, 122 on the downside. Seems like it would be a good support level, 133 resistance. So that's how I've set this trade up. I've actually gone in and right-clicked, brought up my iron condor. I'm selling an iron condor. Let me just go back and delete this, and I'll show you exactly what I did here. I want to get up around the let's see, what did I say? 131 to 132 if I can get a decent price for it. That's fine. So we're going to right-click on this. We're going to sell an iron condor. Now it brings up my call strike prices immediately. I've got the 131, 132, but I like to go 2 points apart, so I'll go 131, 133. And then on the put side, I think I said our support was right around 122 in that area, but we can go as high as 123, even 124. Whatever we can get the best price on. The 123 doesn't look too bad, so let's go 123, 121 on the downside. That gives us about an 86 cents credit, which is pretty good. Maybe a little bit rich. Maybe we can go a little bit higher on the upside, because I think there's more upside potential on this index than downside risk. So if we go 132, 134, and maybe we can even bring this up, because I like to be right around 70 cents here. Maybe bring this up to 124 and 122. So now we got about a 79 cent credit that we could get. I think that's probably about right. We're going to do 3 contracts on this. we're going to, now the very next step, after we get this into our order entry window here, we're going to take a look and analyze it as a duplicate trade by itself, and take a look and see exactly where we are in our picture. If we like this picture, then we're going to go ahead and do the trade. But our break even is down here around 123.25 on the downside. On the upside, we're right around 132.82, which equates to 13,282 on the Dow. Let's just take a look at this again. And it looks like, you know, that wouldn't be too bad, 132.83. So we're up in here, which will probably hit before this expiration date. But you know what? As prices go up, we can also adjust our position as well. We just want to make sure we're getting a fairly decent credit on the downside, which we are. We're selling the 124 at $1.19. We're buying the 122 at 79, which should be fine. And remember, the nice thing about iron condors is the price can't be in two places at one time. So if the price does run up on us, guess what? The put side of our position is going to dramatically increase in profit, and then we can simply roll the position up, hopefully capture the same amount of credit that we did originally on the upside, and recapture that credit on the upside when we have to adjust. We just did an adjustment on the SPY iron condor, so go ahead and go take a look at that adjustment CD again for the adjustment that we did on the SPY. We'd basically be doing the same thing on this iron condor here. I'd like to get this on as soon as possible, so I'm going to give these guys a little bit extra price. I'm going to go out. I'll take 77 cents on that. I'm going to go ahead and send that in, and let's see if we get filled. So now we have to do is kind of take a look at, let's see, we're going to do cancel replace. Let's take a look at where the current market is. We should get filled on that. The diamonds are a little bit tougher to get filled on for some reason. The bid and ask spreads are very, very nice on the diamonds. They're highly liquid. They really do. They do have nice bid and ask spreads. Sometimes a penny, sometimes 2 penny at the most. And we got filled on that. That's very nice. It took a little while, but we did get filled on it. So we can delete that, cancel, replace. Now we are in our Analyze tab. We're going to delete our simulated tabs because we now actually have our position down here that you can see in our demo account. So our margin has been, our margin requirement was only $600, which was not too bad for a profit potential of about $231 on this trade, which is very nice. So that's a 30%, we can get about a 30% return on margin if we see this all the way to expiration. We're looking for closer to a $100 to $150 profit potential on this position. Once it gets up around $100, $150, we're about 30-40% of our return on margin. Then we're going to start to take a look at taking this position off if the price is like very close to our break evens or something like that. But if it's right in the center, you know, we may hang in there and get the full profit potential on this position. But normally we like to take it off about a week before expiration. So that's how we got filled on our diamonds. Now let's take a look very quickly at our entire portfolio. Right now we have the diamonds position, and this is our portfolio weighted position. So we're still looking very, very good. Our entire profit position on our portfolio as it stands now is about $1,200 for the month, with a margin of $1,600. That's pretty decent. I mean, you can't get a 60, 70, 80% return on investment in a month with just about any other kind of investment that I can ever think of. I don't know about you, but my money market's paying about 3% right now for a year. So this is a very good return on investment. So that's how we did. We entered into a diamond iron condor position. We sold an iron condor. We decided on our support and resistance points. We took a look at the channel to determine those support and resistance points. We have a plan in place in order to profit from this position. As always, this is not a recommendation that you guys do exactly the same position, because this is a time in the past. You're watching a recorded video. So, but this is how we like to build our positions. We have the diamond position on. Let's just take a look at the individual symbols here. We have the diamond position on. We have a SPY iron condor. So we have two iron condors. We have a SPY and a diamond iron condor. We have an EEM, which is the emerging, I always put that third E in there for some reason. We have the emerging market ETF position, a double calendar. And we have the good old IWM position, which is a great position because this thing really moves very, very, very much. It did move against us at one point. We had to adjust, but boy, it's a really nice little index. So those are our positions right now, and you can take a look down here. We've got the diamonds, we've got the EEM, the IWM, and the SPYs, and we're pretty much full for this. Those are the positions I like to take on a monthly basis. The ones you take really depend on your situation. But those are the positions I like to take on a monthly basis. A couple iron condors, a couple double calendars, and we're up right around our margin requirement right now is around $1,600 for our portfolio. We have a profit potential, maximum profit potential right here of about $1,400. So you're talking about 70-80% return on investment if we hold it to expiration, but we don't. We don't normally hold it all the way to expiration. We'll probably be taking profits right around the 50-60% level, which is about $500-600, and even $500-600 on a $1,600 margin, that is a 30% return on margin, which is just wonderful. So those are how we add positions for the diamonds, and as always, you know what to do when the prices run against you. You never have to get caught off guard. You can trade with confidence. You can review your positions on a daily basis, and it only takes a few minutes. Make adjustments as necessary, and that's why I always say, guys, trade with confidence.